A very good afternoon to you, great golf learners. My name is Mr. Simbi, and welcome to today's accounting lesson. This lesson is brought to you by the Gauteng Department of Education in collaboration with Sapono Discovery Center. So today's lesson is a very, very exciting lesson because remember we are set to write our paper 2 tomorrow. So we are just going to touch a few aspects when we are doing our revision. But remember that we have covered some of these lessons in the past where we have covered each and every particular topic individually so in the course of the year. So if you need some assistance or certain calculations in certain areas, it is of great importance that you go back and check the calculations that we have done during the year. Here are my objectives of today's lesson. I will look at the structure of paper 2. Very key and very important that you know the structure of the paper that you're going to sit for. Otherwise, you end up doing certain aspects which do not belong to that particular paper. So I'll speak to the structure of paper 2. I'll also not be able to cover bank reconciliation because of time. So you have to be able to do bank reconciliation in your own time. Debtors reconciliation. This is a topic that needs to be covered because we will not be able to cover that in today's lesson. So the bank reconciliation, I will not be able to cover that. Debtors reconciliation, I'll also not be able to cover that due to time. And to add to it, I'll also need you to look at your creditors reconciliation. I'm just going to come here and say creditors reconciliation. All right, so we will just talk on these aspects, but I will not get deep into them. And we will be able to cover inventory valuation, however, and we will also touch cost accounting. We'll touch cost accounting. But due to time, we may not be able to cover budgeting. So you need to look into your budgeting as well. So there are other aspects as well that you need to look at, such as your debtors age analysis, but that also is one of the aspects that you need to look at. So before I go on to the next one, I'm just gonna add here that you also need to look at your debtors age analysis, your debtors age analysis as well. Okay, so let's go on. The topics for paper 2, these are the topics, and these has been the trend in the past papers. And in terms of the marks that have been awarded to these particular topics when they come into paper 2. And remember, you were looking at the management of resources, and we also have to look into our internal control. So you have cost accounting, and at times, depending on the paper, it can be plus minus 55 marks. Inventory valuation also comes in, and it can also look at between 35 marks, more or less. And then budgeting, it is one of the questions that can also be tested, and you can look at plus minus 40 marks. Reconciliations. Remember, on reconciliations, I spoke about the BRS, the CRS, and the debtors reconciliation. And here you also need to look at your debtors age analysis as well. And then your VAT, normally you would look at plus minus 15 marks. All right, that is your VAT. And then very key that you also look at your tangible assets. That is calculations and the completion of certain notes like note number 3, as well as problem solving. So these are some of the aspects that can be covered on the topics for our paper 2, which we're set to write in the next few hours that are to come. Okay, so these three here, they have been assessed in much of the papers that we have seen in the past. Your cost accounting, your inventory valuation, and your budgeting. So these are topics that have been assessed in the past examination papers. And then you can have other topics which can be assessed and cannot be assessed as well, depending on the papers. But these first 3 have been assessed in the recent papers that we have seen over the years. And then let me speak also now on to reconciliations. It is very important that you go through your bank reconciliation and know your format. Remember the bank reconciliation. If you are still struggling with the bank reconciliation, remember we've done a lesson on this platform, and I think we covered it in 2 weeks, where we did the bank reconciliation properly, right from the start to the finish, where we looked at entries in the journals, CRJ, CPJ, and we also looked at entries on the bank statement, and we're able to correct certain errors and omissions, and as well as preparing the bank reconciliation statement. The debtors reconciliation. So we did do the debtors control, and we were correcting it against the debtors list. All right. And we did do this one, I think, in the past few lessons where we did the debtors reconciliation. If you're still struggling, on this very same channel, you will find these particular lessons. The debtors age analysis, we did it very recently when we're looking at problematic debtors, challenges that you may find with your debtors. So please do make sure that you do revisit some of these lessons. Creditors reconciliation. You will recall that we covered this in two different ways. The first one, we looked at the creditors control against the creditors list. We covered this one and we had lessons on this one. And we also covered the creditors ledger and the creditors statement. This was covered in these lessons as well. Okay. All right. So here's the structure of the paper 2. If you need to look for material to revise, apart from the lessons that you'll find on this very same channel, which we've done over the course of the year, you can still use your SIP material to revise. And if you need direction, this is where you can find some of the lessons. If you're looking at your inventory problem solving, you'll find them on page 116 to page 120. This is your inventory problem solving. And then remember, there are also financial indicators that can also be calculated when you are in your inventory valuation topic. And then I think you can find this on page 120 as well. And then when you look for information that pertains to tangible assets, that is the calculation of depreciation, 1 rand residual value, and all those calculations, you'll find them on page 141, 153, and then from 162 up to 164. This is where you find all the information that you need on tangible assets. When it comes to cost accounting and you're still in the SIP material, you'll find it from page 191 up to 194, as well as the correction of errors. And then when you need direction on the reconciliation, remember your BRS and all the other calculations that you may need, you find it from page 230 to 232. And then if you go on to session 21 to session 32, you will then find your creditors reconciliation, which begins from page 12 to page 15. I hope you're taking these ones down so that when you do a revision, at least they can assist you. And then when you look at your debtors reconciliation, remember your debtors reconciliation in the SIP material, you'll find it on page 26. And then the debtors age analysis, you'll find it from page 30 to 32. And then VAT is on page 59. Then lastly, your cost accounting calculations, especially for additional profit. I think I've seen questions like that where you must do calculations for additional profit. You'll find that on page 207. So these are pages that you need to focus on as you will be doing your revision. Okay. So if you need more clarity on these topics, remember we have done live lesson broadcast on these ones, and they should be able to assist you. Okay, so we're going to begin first with cost accounting. And before we get into our calculations, we're going to take a 2-minute break. And then after 2 minutes, then we begin with our calculations. See you in 2 minutes.
I want you to ask yourself these 3 questions. Number 1, what do I want? Do I want to become an A student or do I want to become an average student? Number 2, I want you to ask yourself, how do you plan on getting there? Are you going to put more extra hours or are you going to just sleep? Number 3, who will be with you in this journey? Because it is important that we associate ourselves with students who have the same vision as us, who want to become a student, who want to put in the extra work, who want to become better at what they do. Unsuccessful people do not plan, they just let life happen to them. But successful people are planning on how they want their lives to be. And right now, you plan on how you want your results at the end of the year to be like.
And welcome back, dear learners. Before the ad break, we spoke about the structure of paper 2 and we had a breakdown of what topics can be covered in paper 2. And because of time limitations, we're definitely not going to cover everything that can possibly come in paper 2. But we're going to focus on certain things and then we are going to focus on what we've seen to be consistent in the previous past papers. So to begin with, I'm going to start with my cost accounting and I'm going to look at factory overhead cost and the production cost statement. And let us begin. So this one is a question 3 and it reads Ladu manufacturers. And it says the business manufacturers leather purses and the financial year ended on 28 February 2023. And then we are required 3.1.1 and then 3.1.2. So as you are preparing for your paper, it is very important and very crucial that you know your timelines, that is your financial period. When does the financial year begin and when does the financial year end? So you need to know these particular times, the beginning of the financial year as well as the end of the financial year. That will allow you to be able to do certain calculations and be able to do adjustments as well. So in this particular question, the financial year ends on the 28th of February 2023. And as you have seen in the recent papers, that the financial year can change. You can be tested of a financial year that ends in April. You have seen that in a paper. It can also be up to June, and it can vary depending on the examiner's decision. So we're going to now go and look at the information that has been provided. And we have information C. But we keep in mind the financial year ends on the 28th of February. Okay, so it then says the following costs were omitted and must be taken into account. So what we are given here, we are given an amount of 2,638,600, and that is before the following is taken into account. And what we have is costs that were omitted. So that means these are costs that were not taken into consideration. And we need to do that. So it is very key that you know how to do this, but we're going to go through these adjustments together. So the first one then says, insurance. Insurance is a fixed monthly premium for the entire financial year. The amount paid, which is 235,950. It includes the premium for March 2023. So remember, the financial year is ending in February. But the amount for insurance, which has been paid, which is 235,950, they say it includes the premium for March 2023. And then we are told 2/3 of this expense relates to the factory. So you would know that the other amounts would relate to your selling and distribution as well as administration. So let's come here and we'll now say insurance. So we say insurance, all right? And then we open our brackets. Come here, here's my bracket. How much do we have here? It is 235,950. So it's 235,950. And then we are told that this is a premium that includes the month of March. So we know that we must have only up to February. But if it includes March, that means we have 1 month extra. So we come to our calculator and we'll now say the amount that we have, which is 235,950, 235,950. And then we divide that by 13. We divide that by 13. You're going to have 18,150. So that's one of the options where you come here and say minus 18,150. 18,150. Another one would have said your 235,950. Then you get 12 over 13. It would still give you the amount. If you say this minus that one, it would still be the same. All right. So if you come here and you now say your 235,950, your 235,950, if you multiply that by 12, if you multiply by 12 over 13, it would give you 217,800. So it will give you 217,800, which is the same if you subtract your 18,150 here. And then we are told then that 2/3 of this expense then relates to the factory. Then you come here, then you get 2 over 3. So you're coming here to say, if you're using this method, then you simply say multiply by 2 over 3 again. So we're coming here and then we're going to say that amount multiply by 2 over 3. And then that is going to give you your amount, which is 145,200. So we come here, you end up with your 145,200 over there like that. This is what you would have done to your insurance amount. Okay. So we're going to come to the next one, and it says, water and electricity allocated to the office was 69.2. Note that water and electricity is shared according to the floor space as follows. So we're coming here and we're going to say water and electricity. And we open bracket. And then we're told it is allocated to the office. That is 69.2. So it is very key that you understand this sentence, because it says water and electricity allocated to the office. So this is not the total water and electricity. It is the part that was allocated to the office. And the amount that was allocated to the office was 69,200. Then you come and you now say, that means the 69.2 is equal to the portion which the office occupies in the entire building, which is your 160 square meters. So you now say this is equal to 69,200. What do we want? We want the factory, and the factory is what? 560 square meters. 560 square meters over what we have. So we are simply saying what we want over what we have. So what we have is a rand, it has the square meters. And what we want is the factory. So we want 560 and we have 160. And then we multiply there like that. And then what do? We close our brackets. So we come here and then we say, what we want is 560 and what we have is 160. And we multiply that by 69,200, 69.2. And it will give us 242 200. So we come here, we end up with 242,200, like that. 242,200. Okay, then let us come to the next one. Let us come to the next one. And this is now on our rent. And it reads, a rent of 316,000 was recorded in the factory overhead cost. So this rent was recorded. Very key here now. The rent was recorded in the factory overhead cost. So you come here and you're now saying rent. The moment the amount is recorded, you have to now say there are different ways in which one could have done this. But the easiest way is to come and take out the wrong amount that was recorded. So we are told 316 was recorded in the factory overhead cost. However, this was incorrectly calculated. So you come then you say rent minus 316,000, like that. And then it was calculated on the incorrect ratio of 2:5:1 for the factory. So there are different other ways in which one could have done this. But here is one of the simplest ways. You have to understand that when we split it initially, it was 2, it was 5, and it was 1. So it's 7, so the total was 8. All right? That is the total. So we would want to get the total before it was allocated. So the total would be an 8, and the rent in the factory overhead. All right? And then we now know that the factory was getting 2 because we are told here 251. So the factory gets 2, the sales get 5, and the office gets 1. So we want the 8, the total, but we have been given the 2, which is the factory overheads, and we multiply by 316,000. And we say equals to. All right, so we come here, then we now say what we want is 8, what we have is 2, and we multiply this by 316,000. By 316,000. We want the total before it was incorrectly allocated. That was 1,264,000. So here we have 1,264,000. So we came back to the original amount before it was allocated. Now, let us share this amount now the right way. We know that we always begin with the factory. So the factory has to get 5. So we come here, the factory is going to get 5. And the total is 5, 7, 8. So it's going to be 5/8. So we're going to come here and then we're going to say now that multiply by 5/8. And that will give you 790,000. So we come here, we get 790,000 like that. So I'm going to come here and I'm going to say my rent is 316. Then I'm going to come and add the 790,000. So on our calculators, we will now say it is a negative 316,000. A negative 316,000. Simply clear the calculator. A negative 316,000 like that. A negative 316,000. Then we're going to add 790,000. 790,000. And then we end up with 474,000. So we come here, we have 474,000 like that. And then what you're going to do is going to add up everything, and then you end up now with the total, which is your 3.5 million like that. That is what you end up with. Okay, my dear learners, we've done the first activity. We're going to take a 2-minute break, and then I see you after 2 minutes. Welcome back, dear learners. Before the break, we did calculations that pertain to effective overhead cost note. Remember, there were omissions and there were errors. And before that, we spoke about the structure of the paper for paper 2. So now we're going to go on to the next part of this question. And in here, there is a production cost statement. And on the production cost statement, we are going to now bring our amount. Remember, we're the factory overhead that we have just calculated. And that factory overhead amount, the factory overhead amount, I think you still remember, we calculated it and it was 3.5 million. So here's my 3.5 million here. And here I have my prime cost. I have my prime cost. Okay, so if I add my prime cost to my factory overhead, that will give me my total manufacturing cost. And you'd see here, it will give you 16 million over here. So you end up here with 16 million. So let's come and calculate our direct material cost and our direct labor cost. Okay, and then we are told here, so here we're going to be working on our direct labor cost. We're told that we have 40 employees, so here we have 40 employees, and we're told that these guys have a basic wage rate of 60 Rand, so it's 40 multiplied by 60, as you can see there, and the normal time that they are working. So, but if you say 40 by your 60, that should give you your 2,400 here. You get a 2,400. So this is what we pay our 40 employees per hour, okay? Because they're being paid 60 rands per hour. And then we come to the normal time hours. So the normal time hours is 1,920. So you're going to come here and we're going to say this multiplied by 1,920. So I'm going to come here and it's going to be 2,400. Then we multiply by 1920. And then that's going to give you 4,608,000. So you come here, it's 4,608,000. All right. And then you now come and then you say plus your overtime. So you come, you add your overtime, that's 1,142,000. You add that together there. And that will give you your 5,750,000. So when you come here, you're now going to say direct labor cost. Direct labor cost. And your direct labor cost is 5,750,000. So you're easily now able to get your direct material cost. And how do you get your direct material cost here? You now say your 12.5 minus your 5,750,000, and that will give you 6,750,000. That becomes your direct material cost. And then you can complete this production cost statement because you're now saying your 16 million plus the 542,000. That's going to give you 16,542,000 over there like that. And then to complete this bottom part, there are several ways in which an examiner can ask you to complete this production cost statement. Remember, you can do it from the top to the bottom or from the bottom to the top, depending on how it is structured. So you're going to come here and you're going to say, there is 33,500 units, and they are all at a cost unit of 475. So we're going to come here and we're now going to say 33,500, and we're going to multiply by 475. And then that will give you your amount, which is 15,912,500. So we'll come here, that's 15,912,500. And you get the difference now between these two amounts. That becomes your work in process. So if you come and you say you're 15 million, you can even subtract the 16 million, which is 16,542,000. 16,542,000. And then you're going to end up with 629,500. So here it becomes 629,500. That becomes your work in progress at the end of the year. Okay, so we're going to go again and do another activity, which is now our activity, the following activity. Okay, let's do that one and see the different way in which our cost accounting question was tested in this particular paper. Okay, so we're still looking at the factory overhead cost and the production cost statement. Okay, so, and this is going to require us to do our direct material cost, and then we're going to do the factory overhead as well as the production cost statement. Let's look at it. So we are given again an incorrect total, and we have three adjustments, as you can see, 1, 2, and 3. Let's begin with the first one. The first one says, the closing stock of factory indirect material 7,000 was omitted. Okay, so it is very key to note that when you are given closing stock, do you add it or you subtract it, especially if it was omitted? You would understand that you have done some calculations where you would start with opening stock. You say opening stock plus purchases, and you come then you say minus closing stock. So closing stock will always be subtracted. So you would come here and then you would say indirect materials. And then you'd say indirect materials. So this indirect materials of 7,000, are we going to add it or are we going to subtract it? We are definitely going to subtract it. So we come here then we say minus 7,000 because it is closing stock of indirect materials. Therefore, we would subtract it. If it was opening stock, then you would have to add it. If it was a purchase which was omitted, then you would have to add it. So this becomes key, therefore. Let's go on to the next one. It says, the total water and electricity cost for the year, 84,000, was included in the factory overhead. This should have been allocated as follows. So the moment you have the total that is included, we agreed earlier on, it is much safer. You come and say water and electricity, take out the incorrect amount. The incorrect amount was 84,000. That was included. And then you now say that 84,000 that was included, this is the total. It should have been split as follows. The factory gets 60%. So you come here, you get your 60%. And let's see if we can calculate that. So we'd come, then we say 84,000. Then we multiply by 60%, and that will give you 50,400. So you come here, you get 50,400. So you come, then you say plus your 50,400. You close your bracket. And then you are coming to now say what you had, you said minus 84,000. And then you say plus 50,400. And then you're going to end up with a negative 33.6. So you come here, you say minus 33,600. That is how you would end up with the amount. So first you take out the incorrect amount, then you come and you add the correct amount, therefore. Okay, let's go on to the next one. The next one then says, factory insurance, 45,000, was allocated according to the old ratio of 3:1:2 for the factory, sales, and office respectively. So the factory gets a 3, the sales gets a 1, and the office gets a 2. It should have been split according to the floor space as follows. So remember what we said. This is for the factory insurance. So we come here, then we say insurance, we open bracket, and the incorrect amount, we always take it out. So we come here, then we say minus, okay, so this is factory insurance, 45, was allocated according to the old ratio. This was allocated according to the old ratio, that is the 45. So if you desire, you can come, then you say minus 45,000 here. You take out the incorrect amount. Then you now say, you want the total, which is 3 plus 1, that's 4, plus 2, that's 6. So you want the 6, and for the factory, we had given a 3. So you want 6, and you have 3. And then you multiply that by your 45,000. So if you come to the calculator, we are now saying here, it's going to be 6 over 3. And then we multiply by 45,000. 90,000. And that is going to give us 90,000. So we come here and we say 90,000 like that. And then we come and say plus 90,000. Plus 90,000. All right. Is that correct? No, because we still have to split that amount. So we're going to come here and then we say that 90,000 that we got, remember to split it. That 90,000, we still now have to come and split it according to this floor space. So we now say that 90,000, then we say how much is the factory getting? 1.5 square meters. And what is the total? This is 1.5, 1.8, and that gives you 2.4. So you say 1.5 over 2.4 square meters. How much do we then get? So we then say 90,000, multiply that by your 1.5 over your 2.4 square meters. And that's going to give you 56,250. So we come in, then we say plus 56,250, and then we close bracket. So when we come here now, we're now saying, let's remove that. We're starting off with a minus 45,000. Then we say plus 56,250, 56,250. And that's going to give you 11,250, 11,250. And then we close that up, and then we get the total here. All right. And when we get the total, it's going to give you, let's see on the calculator. Let's do it together. Always remember to add the 600,000, the incorrect total. Don't forget to add that one. Okay. So you start with your 600,000, and then you're going to say minus 7,000, minus 7,000. Then you're going to say minus 33,600, minus 33,600, and then you say plus 11,250, plus 11,250, and that's going to give you 570,650, 570,650, like that. And that is how we conclude this part of the question. Okay, dear learners, we're going to take a 2-minute break again, and then I'll see you after 2 minutes. Welcome back. So before the break, we did correction to the incorrect total that was given for the factory overhead cost. And then I'm not going to come, and then I'm going to calculate some direct material cost, and then we're going to see where we're going to take it now to the production cost statement. Okay. So here we're told raw materials that is the fabric to manufacture t-shirts. Fabric is issued from the storeroom to the factory for production. The weighted average method is used to determine the value of the fabric. Okay, so it is very possible as well that the examiner can fuse some of these topics, such as your inventory valuation, into cost accounting. Very, very possible, where you can find certain elements in your cash budget even that might relate to the cash flow, such as the proceeds from issue of shares. So you must not be limited in terms of your mind. I've seen certain papers where this has been done. So in this question, we can see where the weighted average method, the examiner could have used the first in, first out, and then test the inventory valuation separately then later, only to have the FIFO and the specific identification in a separate question. But here they would have brought in the weighted average. So that can still be tested as we see here. So as you practice, make sure you expose yourself to certain questions like that, where there can be integration of certain topics that can relate. So here we're told the weighted average method is used to determine the value of the fabric. And then 1.2 meters of fabric is required to make one t-shirt. Okay, so here we now need to know, here we're given the raw materials issued to the factory, that was 18,900 meters. So here we have 18,900 meters. But what is the weighted average price per meter? That we don't know. But it is easy to get that, because if you come here, you see you have materials available for use. And then these ones, if you say the 958,800 and you divide it by the 20,400, you divide it by the 20,400, it will give you now your average price per meter. Let's see if we can get that together. So that's going to be 958,800, 958,800. And then if you divide that by 20,400, you will get 47. So the average price per meter is 47 rands. So it's 7 rands per meter. That is the average price. And then here you have 18,900 meters that were issued to the factory. So you're simply going to calculate and multiply that by your 47 over there. Let's see how much we're going to get on our calculator. So it's going to be 47 multiplied by 18,900. And that will give you 888,300. So it becomes 888,300 like that over there. And then when we come down in the production cost statement, you're now going to have your direct labor cost. It is your direct labor cost. And your direct labor cost is now the 888,300. Okay, so that then gives you your total direct cost or your prime cost. So here, your prime cost, when we come to the next part of the question, we are coming here now. Remember, our direct material cost here was given to be 888,300. And then if we add this two, they were giving us 1,296,900. 196,900. And that is our prime cost. Okay, that is our prime cost. And then from there, we are given more information. Let's see if we can use that. Remember, we have already done the factory overheads. So we're coming here, then we say factory overhead cost. And the factory overhead cost amount that we did, remember, it was 570,600. So we're going to add that now. And here we end up with 1,876,000. 1 million. Okay, let's bring the calculator that we can do it properly. All right, let's bring the calculator. And then it's going to be your 1,296,900. 1,296,900. Then we're going to add 570,600. And that's going to give us 1,867,500. So here it becomes 1,867,500. And then we're given work in progress at the beginning. Then we're going to say plus work in progress at the beginning. And work in progress at the beginning was 0. So that will give us 1,867,500. Then you subtract work in progress at the end. And work in progress at the end, that's 235,500. 235,500. So you're going to come and then you're going to say 1,867,500 minus the 235,500. That is the work in progress at the end. 235,500. And that will give you 1,632,000. 1,632,000. 1,632,000, like that. Okay, so this would then conclude this particular calculation. Okay, so what I'm going to do, I will not continue again with more cost accounting. I need to touch a bit of inventory valuation, but I want to encourage you to go and look at your abridged statement of comprehensive income, your abridged statement of comprehensive income. Make sure you do calculations that pertain to this, and you also need to do calculations that pertain to break even, as well as the analysis of the break even. You also need to be able to calculate amounts that pertain to making more profit, or if you're to realize extra profit, what would you do in such calculations? But because of time, as I said, we'll not be able to cover these in this lesson. So I'm just going to go and touch a bit on inventory valuation for the remainder of today's lesson. So we're going to take again a quick break, and then after the break, we're going to look at inventory valuation. See you guys in 2 minutes.
Excellence. Excellence is a habit. Excellence is a quality you have, a quality I have. It's a quality we have when we honor what is true to us. Yes, we are gifted differently. uNkulunkulu akasinganga ngokufana. Excellence is striving for your best. Whenever you have a particular project, test, homework, uzibuze, ask yourself, is this my best? Can I put in more effort? Excellence is striving to be in the top 1% of the area in which you are gifted. And so I challenge you, in every single thing that you do, in every single area that you're gifted in, whether it's sports, it's academic, ucula, whatever that gift is, strive for excellence. excellent.
And welcome back, dear learners, from the short break. So, as I said earlier on, because of time, I will not be able to cover everything. So, I have done calculations that pertain to cost accounting. I'm now going to move on to inventory valuation. And we have an activity here on inventory valuation. All right, so let's go on. And the information reads: Putin Sports Shop is owned by Miroslav. The financial year ended on 28 February 2022. And then the periodic inventory system and the first in, first out stock valuation method is applicable. These items have a shelf life of 66 days. So very key as you continue on with your calculations. Then it says calculate the value of closing stock using the first in, first out valuation method. Okay, so here's the information that we are given. So if we are to calculate the value of closing stock, we would know that the units that we are given at the end. So 1 March is the beginning of the financial year. And what we want to calculate is the value of the closing stock, which we have on 28 February. And the units are 235 units. So we're coming here to now say the 235 is the units at the end. And at the bottom, how many units do we have? So remember, whenever you are using the first in, first out, you would use your bottom up method. So you start from the bottom and then you're going up. But you need to take note of information that would have been given. For instance, here we're told that the business pays MTY Transport a fixed rate of 8 Rand per tab to deliver to the store. So you would come here and you would know that your price here is 475 plus 8 Rand. So you're doing it for all your unit price here plus 8 Rand. Then they say 30 damaged tabs from January 2022 purchases were returned to the supplier. The supplier reversed the total cost price, excluding the carriage on purchase. So it means I come to my January here because the returns are from the month of January. So I come to January, then I say 180 minus the damaged, which is 30. So if I say 180 minus 30, that leaves me with 150. These are the units that I have in January. So I come here, then I say 150 over here. And that 150, we multiplied by the total unit price here, which is 475 plus 8, that will give you 483. So I come here, I multiply by 483 over there. Okay, let's see how much that is going to give us. So that's going to be 150 multiplied by 483. And that would give me 72,450. 72,450, like that. Then it's 235 minus 150. So you're coming to say now your 235 at the bottom minus 150, and that will give me 85. So I look in the next month after January, that is the month of November. In the month of November, I need 85. So I come in, then I say 85. Then those 85, what is their unit price? Remember, it's 460 plus 8. So that makes it 468. 468. So I'll come here, then I'll now say it is my 85 multiplied by 468. And that will give me 39,780. So I'll come here, that's 39,780. Remember, I have to add these two amounts now, and that will give me 112,230. Okay. And then, if I am to bring a question here, maybe one of the questions that can be tested here is calculate the average stock holding period. All right, let me just create a question here and say calculate the average stock holding period in days. So there are two methods. Remember, you can use your rands or you can use your units. You can use your rands or you can use your units. If you're going to use your units, you're not going to say opening stock in units, that's your 130, and your closing stock in units, that's your 235. Okay, 235. And then you then say over your cost of sales. So we're looking at the units sold. That is 925. 925. So what is key is to know for how many months or what was the period that we had this particular product. So you can see here we had it from March and we are now in February. So this was for 12 months. You have to take note of that because there are certain questions which can have 7 months, 9 months, 6 months. So when you come here, you cannot multiply by 365 days. But in this one, we had it for 365 days. 365 days. What is key is average. So that means I have to come here and get my average over there. Okay, because we're calculating the average. Calculate the average stock holding period in days. Okay, so this is what you do if you are using your units. If you're using your units. But you can also find questions where they can say, calculate how long in days it can take to sell the closing stock. So if such a question comes, calculate how long in days it can take to sell the closing stock. I'm going to see if I can do it in the very next activity. All right, if I can look for that activity, because remember, we had prepared more, but because of time, we'll not be able to do that. So we're going to go on to the next activity, and we're going to take again a 2-minute break just so I can go and look for an activity that allows us to answer such questions. So guys, I'm going to see you in exactly 2 minutes.
Excellent. Excellence is a habit. Excellence is a quality you have, a quality I have. It's a quality we have when we honor what is true to us. Yes, we are gifted differently. uNkulunkulu akasinganga ngokufana. Excellence is striving for your best. Whenever you have a particular project, test, homework, uzibuze, ask yourself, is this my best? Can I put in more effort? Excellence is striving to be in the top 1% of the area in which you are gifted. And so I challenge you, in every single thing that you do, in every single area that you're gifted in. Whether it's sports, it's academic, ucula, whatever that gift is, strive for excellence.
Welcome back, dear learners. Before the ad break, I promised that I was going to look for a question that can help us to do some of those calculations that I was speaking about. Okay, because of time constraints. So here we have an activity and it reads Lion Stores. The business is owned by Lion and sells one type of leather purse. The business uses the weighted average method and the periodic stock system to value stock required. Refer to information A. Calculate the following for the financial year ended, the value of closing stock. Let's look at the information. And here's the information that we were provided with. And here we were required to calculate the value of closing stock. So if we're using the weighted average method, that would simply mean that I must get my rands over my units here. It's rands over units. And then I'm going to start with my opening stock. So here's my opening stock. My opening stock is 71,040. And here at the bottom, it's 480 opening stock. Then I'm going to say plus. Then I'm going to add my purchases, which is 362,500. So I come in, then I say 362,500. And the units purchased are 2,000. Then I say plus 2,000 here. All right. So I've said opening stock plus purchases already. And then we come and we read information that is here now. Returns. I know that once I have returns, they must be subtracted. So we are told on January we returned 30 units. Each one has a cost price of 205. Then it's 6150. So I have to come in and say minus 6150. And then I say minus how many units were returned? 30. And then I'll come in and say carriage on purchases. Total carriage of 20,960 was paid for purchases. Total carriage of 20,960 was paid for purchases during the year. And then Lion Stores was not reimbursed for carriage on returns. So we're going to add the entire carriage amount, which is your 20,960, like that. All right, so we're going to add the top part. And once we add the top part, we're going to get 448,300 like that. And then we divide it by the bottom part. 480 plus 2,000 minus 30. That's going to give you 2,450. All right. And then we divide that now. How much is that going to give us? So we come, then we say 448,350. 448,350. Then we divide it by 2,450. 2,450. And that gives you 183. So I come here, that gives you 183. Then we say that 183, that is the average price per unit. Then we multiply this now by the closing stock, which is 360, multiply by 360 over there. So we come, then we say that, multiply by 360, and that will give you 65,880. So you come here at 65,880. This is what we would do with the weighted average method. Then the next question now, so let's make this A, that becomes your answer here to A. And if we come and we are doing B, which is the cost of sales, if we're to do B, our cost of sales, that becomes very easy. We simply take our 448,350 here, because remember, with cost of sales, you have to say opening stock plus purchases minus the returns plus the carriage. And remember, at the beginning of the question, they did tell us that they're using the periodic stock system. So to cut the long story short, I simply take my 448,350. So it becomes 448,350. Then I say minus my 65,880. 65,880. So I come again to my calculator. Then I'll say 448,350 minus 65,880. And that will give me 382,500. So it gives me 382,500 like that. 382,500. Okay, so that becomes the value, my cost of sales. That becomes my cost of sales there. That becomes my cost of sales. And then I have another question here, which I'm going to call C. And here they said calculate the gross profit. Gross profit. So we understand to get gross profit, you have to say sales minus cost of sales. That gives you your gross profit. So my sales, I have to calculate it now because it is 2,050 units multiplied by 295. Okay, so I'm coming here to say 2,050 multiply by your selling price per unit, which is 295 here, and that is going to give me 604,750. So it becomes 604,750. Then I come and I subtract my cost of sales, which is 382,500. That gives me gross profit. So I'm going to come here and I'm going to say 604,750 minus 382,500. 382,500. And then that gives me my gross profit, which is 222,250. 222,250. There, like that. That therefore gives me my gross profit. A time the examiner can ask you to calculate the markup percentage. What was the markup percentage that the business achieved? So you need to be able to do certain calculations like that as well. Okay, so this was one part of the calculations that we did. We remember we're coming from the first in, first out. We're on the weighted average. This is just a reminder of what we've been doing throughout the year. Let's see if we have more questions that we can answer. Here, the question goes on to say, calculate the number of units missing. Calculate the number of units missing. And then it says, calculate how long in days it would take to sell the closing stock. How long in days it would take to sell the closing stock. So to get the missing stock is not a problem. There are different ways in which one could have done that. But let's begin here. You're going to say my opening stock, that's 480, opening stock, plus my purchases, which is 2,000. Opening stock plus purchases, 2,000. And then, do we have any returns? Yes, minus my returns, which is 30, and then minus my units sold, which is 2050, minus the sales, and then we would now say minus the closing stock, which is 360, minus 360. And then we come here. Let's see what we're going to get on the calculator. So it's going to be 480. Then we say plus 2000. Then we say minus 30 minus 2050 minus 360. And that will give us 40. So these are 40 units that are missing. Now, one of the things that you have to now look into is the internal control measures that have to be implemented when we're missing units. What internal control measures can you put in place to ensure that this does not happen again? So you have to look into internal control measures for stock. Okay. And then the next question. So remember, this was the first part, and this is the second part. How long in days will it take to sell the closing stock? So if you want to know how long in days it would take to sell the closing stock, there is different ways of doing it. One of the easiest way is to say, how many units did we sell? We sold 2050 units, and these 2050 units, we sold them in 365 days. Now, how long is it going to take to sell 360 units? That's the question. So what you want is 360. What you have is 2050 and multiply by 365 days. So we're going to come here and we're going to say what we want is 360 and what we have is 2050, and we multiply that by 365 days, and that will give us 64 days. 64.1 days, 64.1 days, 64.1 days. That is how long it would take to sell the closing stock. Okay, so we're going to go and do our last calculation for the day, and then we do a wrap up. So what I'm going to do, we're going to take again another 2-minute break, and then I see you guys after 2 minutes.
Excellence. Excellence is a habit. Excellence is a quality you have, a quality I have. It's a quality we have when we honor what is true to us. Yes, we are gifted differently. uNkulunkulu akasinganga ngokufana. Excellence is striving for your best. Whenever you have a particular project, test, homework, uzibuze, ask yourself, is this my best? Can I put in more effort? Excellence is striving to be in the top 1% of the area in which you are gifted. And so I challenge you, in every single thing that you do, in every single area that you're gifted in, whether it's sports, it's academic, ucula, whatever that gift is, strive for excellence.
Welcome back, dear learners. Before the ad break, remember I promised to calculate the number of units missing and how long in days it would take to sell the closing stock. We have done the average. So it is very important to know that there are certain financial indicators that you can still calculate when you're doing your inventory valuation. So here we're going to do the specific identification, and the question reads, calculate the value of closing stock of the Pacific TV sets on 20th February 2023 using the specific identification method. So you will see that we have two different types of brands here. We have the Pacific and we have the Caspian Smart TV. And with this one, our opening stock is 350. So you come here, you say 350. That is the opening stock here, 350. And then you have purchases of 800. So you come here, then you say plus 800. That is the purchases. So that's going to give you 1,150 in total. And then you have sold 765. So you come here, then you say minus sales of 765. And in total, that is going to give you now how much? Let's see. So if I come and I say my 350, remember 350 plus 800, that gave me 1150. Then I subtract 765, and that will give me 385. So that will give me here 385. And then these are the closing stock units for the Pacific. So I'll then say my 385, I multiply that by my number of my cost price. I now need my cost price. Remember, that is my number of units at the end. Then I need now my cost price, and my cost price is 9,300. Then I multiply by 9.3. So it's 385 multiplied by 9.3. So 385 multiplied by 9,300. And that's going to give me 3,580,500. 3,580,500. That is what I end up with over here. So this is how you calculate the value of closing stock. And then the next one is going to read, calculate the gross profit earned on the sale of the Caspian TV. Calculate the gross profit earned on the sale of the Caspian TV. So you can see here that our total sales were 10,934,400. And then we are told the markup is 60%. So that's your profit. So here we want 60, and this was sales. So this is 160%. So we want 160 over 160, like that. So we're going to come here, then we're going to say, we want 60, and we have 160. And we multiply that by the 10,934,400. And that's going to give us 4,100,400. 4,100,400. That gives us our gross profit. Okay, so my good friends, we have come to the end of today's lesson. It is very key that you go back to where we began. We spoke about the structure of the paper. We spoke about certain topics that have been coming in almost all the recent papers. And we have seen that your inventory valuation, your budget, as well as your cost accounting has been tested in the previous papers. And I try to cover those aspects today, those two topics. Budgets, because of time, we were not able to go through them. But on this very same channel, we have done debtors collection schedule, creditors payment schedule, and we have done calculation of missing amounts. We've done various calculations that pertain to our budgets. I would encourage you, if you have challenges with those, please go again and watch those lessons. And remember what I said at the beginning of the lesson, that there is SIP material which can assist you with particular areas that you need to prepare. Remember to prepare your reconciliations, your bank reconciliation, your creditors reconciliation, your debtors reconciliation, as well as the debtors age analysis. That is also a topic that is tested in paper 2. Remember, your fixed assets can be tested in both paper 1 and paper 2. So it is very important that you know how to complete your note 3, how to calculate certain amounts, including your problem solving to fixed assets, as well as other problem solving questions that pertain to your cost accounting, your inventory valuation method, as well as other aspects that cover in these topics. I still have so much to say, but we have now run out of time and we are ready for tomorrow's paper. I want to encourage you. I want to say I wish you all the best for tomorrow's paper. I know you have put in the hours. I know you have studied, and I wish that tomorrow is going to be a good day for you. Until next time, dear learners, thank you so much for joining me, and I wish you all the best for tomorrow's paper, and goodbye.